What's going on, everyone? I hope you're having a good day. And today I'm going to be going over my May 10th, 2024 Friday daily recap real quick. And so let's start with the daily buys. And this video is going to have a lot of hidden gems for you. I'm telling you right now, make sure you watch it or you're actually going to regret it. I'm not even saying this for the views. You're literally going to regret it if you don't watch it. So 0.705 area is the optimal trade entry. This is where we're most likely going to reverse, if we are tending to go down and take out this liquidity right here, okay? And if that is also in line with our seasonal bearishness and our weekly downtrend, because the weekly is still in a downtrend. Right? This move up could just be the retracement. We don't know. So if it was the retracement and if it's starting to go down now, it should start right now because this is the optimal trade entry where it starts reversing. Same concept with the daily time frame right here. Look, as soon as we hit the 0.705 area, we have days where we're just consolidating. This is one consolidating day, two consolidating day, three consolidation day, four consolidation day. And consolidation, I just mean not very big range movements, okay? Obviously, this right here went all the way up here and then went back down. And I'll tell you exactly why that went all the way up there and went right back down. Because what is this? This blue candle right here, up close candle before the big move down. This is a very important concept, so make sure you actually listen up. We are going to highlight the low and draw out the range to the low to the high, okay? So low to the high range will be like about there, right? 50% is this 0.5. That is called the mean threshold, and if this gets closed above aggressively, the 0.5 area, I'm going to switch my bias to bullishness and reach for those two equal highs right here, okay? Because at that point, I'm thinking that we're too close to these equal highs, and we have invalidated the mean threshold that we're likely to go up and draw into there. But as of today, I was bearish just because we were respecting this. I knew we were going to at least show some sort of reaction to it. And also, there were a bunch of imbalances. Like, look at this imbalance, look at this imbalance, look at this imbalance, look at this liquidity void. There's been a bunch of voids and imbalances and gaps that we have not been able to fill yet. So I'm pretty sure that even if we're tending to go up, we're going to at least go down before and fill out these imbalances before we go all the way up. And because of all that, I was bearish. Now let's go on to the smaller time frames and look for the bearishness. So before market opened, this liquidity had already been swept. This 4-hour liquidity right here. So after I saw this liquidity sweep, we had these two candles that were pre-market. This candle right here and this bullish candle, these two were pre-market. So what I did was draw out my range from this low, because this is the low that started this big move up. Not this low. This low, after this low, we still went down. So this is the low. The impulsive low is what you want to highlight first to this high right here. Where is the 50% mark? And also, by the way, keep in mind, I did not know that these black candles were going to happen yet. 50% area, what's below it? This liquidity right here. And I was aiming for that liquidity as my daily target, okay? Now let's go down to the smaller time frames and see how I would construct this trade. So there is buy stops here above this liquidity, above this 4-hour high right here. There are buy stops. That's why it's called liquidity, because if it gets taken, then people are going to get stopped out of their trades. So we have buy stops here resting. Market goes up to take them out before market opens, and then we go down. And remember the pattern I showed you yesterday: 3 taps and then reversal. This right here, this bearish move, is the first tap into this liquidity sweep. First tap, then we go down. Then we have a second tap taking this out. Second tap, then we go down. Then we have our third tap taking this out. So this liquidity right here, before the third tap happens, it's a very strong liquidity. Okay, so the second tap that happens is strong liquidity. After I see that this gets swept, I go down to the 15-minute time frame. Alright, so you're probably just seeing a bunch of stuff on my screen right now. I'll explain it real quick. This is 8:30 opening. This red line is 9:30, and this is 11. Okay, so 8:30 opening price was this black candle down, bearish candle down. So the opening was right there, and we use that in terms of power of 3. So first we want to see accumulation of orders, and which is right here. This is accumulation of orders. Then we want to see manipulation to the upside if we're bearish. This rally up is manipulating retail traders to go longs because they see that this is resistance. They see it as resistance, and they see that this is a break of resistance, so they're going longs right here, and that's just manipulating them to go long just so they could get stopped out right here, okay? And that's exactly what happens. This is a manipulation phase, and then you want to catch, as a smart money concept trader, you want to catch the distribution move. There's a distribution. Same thing with the midnight price. I just used the 8:30 in this case because it was higher and closer to price, and I used midnight kind of as resistance because that's how it kind of acts as. And also, you want to see this AM session target. That is very, very neck and neck with our midnight opening price. So that's a very strong signal that today midnight opening price will act as resistance. So as soon as we took out this strong liquidity right here, we valued up drew this swing, right? So I go down to the 3-minute. This is what the liquidity sweep looks like on the 3-minute. Boom, we go up, and then we get a break of structure of this low right here. That's one I would have counted because I don't like counting these little moves up. I like taking the low that has already broken structure before and rallied up to the upside. This right here, this low, wasn't really a rally up that much. This was a higher rally up, and before this rally was this low. So you take that low, and you see the break. The break happens right there. I'm gonna mark it out red as a break. And what is this? This black handle right here. That's a fair value gap, just like perfectly ICT 2022 model. And this was a sniper entry, and I caught like 200 something pips. So we enter the trade right as we hit the fair value gap like that. Boom. Stop loss is above this high right here, and we're targeting this sell side liquidity that was made from at 9 o'clock. Okay, we're targeting that 9 o'clock sell side liquidity. Look how beautifully this delivers. 264 pips times 5 is how much I made on this trade. And if you're wondering why I didn't take this trade right here, this liquidity was taken here and then we broke down, and this was a fair value gap, and we got the re-entry of the fair value gap. That is because of my yesterday's mistake, and I learned from it. Go back to yesterday's video if you don't remember, but this was why I didn't take this trade, and it saved me a loss, okay? But yeah, I hope this video helped you out, and if you have any more questions, comment them down below, and peace out for now.